Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, as always, Michael Becker.
Hey, Paul.
And also James Eng. James, thanks for joining us.
Hey, Paul.
In the podcast today, we have some friends of ours that we had done a transaction for, and there were some challenges in the transaction. And I thought we would kind of talk a little bit about the success of the transaction and some of the challenges that came through the transaction itself. Our guests in the podcast are the owners of a property down in Waco, Texas. That's an area that we do like in Texas, Central Texas, just next to Baylor University. And so in the podcast today, we have Bryant Ho. Hey, Bryant, how are you?
Great. This is Bryant Ho from Dallas. How are you doing, Paul?
I'm doing good. Angel Flores.
Hey, how you doing, Paul?
And then we have Kevin and Daniela Dillon. Thanks for coming in, guys.
Thanks very much, Paul.
Hey, yeah, thanks for having us on.
So, good deal. So, I thought what we'd do is kind of kick it off with James, and let's kind of talk about Landmark Apartments, which is 152 units that you guys just bought. How long ago, Kevin?
May 30th, so what, that's about a month and a half ago now?
Yep, that's right.
Yeah.
So, what part of Southwest Texas are you guys, the Dillons, from?
Yeah, so we currently lay our head in Houston, in around the Galleria area, but it's only been, what?
It's less than a year. It'll be a year in August.
About 12 months, you know. So, certainly enjoying the Houston humidity. But I guess we're kind of used to humidity. I mean, because prior to that, we were in Miami for about 6 years. And prior to that, we were in Australia.
And prior to that, we were in Asia.
Yeah, so we're very used to humidity.
And then how'd you guys get started in multifamily? Maybe touch on that and then we'll kick it over to the other guys.
So Kevin and I are from Australia, and we were already investing in real estate. It would be about 11 years ago now.
Yeah.
But it wasn't until we moved to the US about 6 years ago, that we started investing in multifamily. And to be honest, it was kind of coincidental.
Yeah. So originally, I mean, so we were investing in Australia, and in Australia, I guess you have to understand real estate is very expensive. And so the median house price in Melbourne, Australia is $850,000. In Sydney, Australia, it's $1.1 million. So the original intention when we first came to the US, was the GFC financial crisis, it was a good buying opportunity. So our vision was to buy a bunch of single family homes, But then we realized, I guess with the kind of money we were bringing in, we could go straight to multifamily. And so, the original vision was to close on, our visa allowed us the 6-month window, and we thought it would close in 20 single family homes. 3 months into it, we hadn't closed in a single thing, and we still had a lot of capital to deploy. So, it was my uncle actually.
Yes, who's a realtor in Boca Raton, suggested multifamily, and of course we've never heard of multifamily. It's not an asset class available in Australia, and the first deal that we did was actually a group of fourplexes. So there were 6 fourplexes in a row.
All in a line, yeah.
Yeah, all in a line. And then from there, we started looking into multifamily, got into another deal.
Got a 27-plex.
Yeah,
and,
with a shared community area, shared amenities. And then from there, we just kept going.
That's how we got into it.
Okay, great. And then kick it over to Bryant or Angel. You guys want to kick it off on sort of your background?
Hey, this is Bryant Ho from Dallas. I'd like to tell you a little bit about my background. I spent about 35 years in information technology as vice presidents, IT directors, and chief architect for Fortune 100 companies. So about a year and a half ago, I decided to quit my job and started my early retirement. So after 2 months later, after making a few trips, I got bored. What am I going to do? I can't do this. I'm still young, and I wanted to do something. So I bought some passive, multifamily in Fort Worth. And it seems to work, and I bumped into Kevin and Angel, and I don't want to actually finish one job and start another job. That's not my intent. So we actually form some sort of a partnership that we actually leverage each other, and actually I can take on my vacations while I'm not traveling, and I'm actually work and actually having some fun with the team here.
I think since we started working together, Brian, you've taken like 2 vacations. So you certainly
every vacation is like 3 weeks. And,
that's right.
I took a 3-week vacation in Asia back in I think April. As a matter of fact, when I was in Malaysia, I was on a call with Paul Peebles and James Eng on this deal. So it works, and you don't have to be physically here. And I plan for another trip later this year.
Thanks for the heads up, Brian.
And Angel, give us a little bit of your background.
Sure. So I am native to the DFW area. I grew up here. I actually went to high school in Arlington, Texas, and graduated from UTA with a chemistry degree. And I was stuck in a 9-to-5 job, working for a Fortune 500 company as a salesperson. And I came across this book that many other investors have read. It's by Robert Kiyosaki, and it completely changed my whole way of thinking. And decided to start with single-family homes because it talked about that a lot. And I just knew the natural progression was multifamily. So I decided to go that route, starting small, again, with a fourplex. And I, proved that model. I went to an 11 unit, which actually Michael did the loan on that. So thank you, Mike. And moved up to a 38 unit, and now this is 152 units in Waco. And I'm, really grateful for the people that I've met and that have been along with me along the way. It's been a great journey so far.
So let's jump into this deal on in Landmark Apartments in Waco. Maybe talk about, someone can maybe kick it off on sort of how you guys found the property, what you liked about the property, and we can get into the transaction a little bit.
Sure. So, for this specific property, what happened here, the story behind this was Bryant and I, had met at a meetup, and what we decided to do is, hey, let's partner up and see if we can find a deal together and go through that transaction. We had very specific criteria. We were going to look for B and C class multifamily in the Dallas-Fort Worth area because that was close to us, and that's what we knew. We soon realized after many LOIs that, hey, we needed to expand our search and look for other good areas. And this deal was in Waco, Texas, which we thought was very attractive. It was in that Texas Triangle, good, strong market that we decided was a good place to invest, and was sent to us by a broker. And, we decided to go after it and look at it, and that's what happened.
What do you think sets you guys apart? I don't know how many, I'm sure there was multiple offers on the deal, best and final. Sort of talk through that process and sort of how the broker got comfortable with you guys.
Sure. So this was a broker that we'd never worked with or never met with or had a relationship with before. But I think that was the key. We developed a relationship with the listing broker, and he guided us all along the way. Hey, because we asked him, what do we need to do to win this deal? He said, hey, you got to put hard money down. He gave us all the expectations that he was looking for. And then he gave us some guidance based on where everybody else was coming at, how we were on pricing guidance and some of the other terms. And, he told us flat out, hey, you're buying from a big REIT. So there's going to be challenges with this. So, anything that you put in an LOI, just make sure you're going to be able to commit. And we all decided that, it was a good deal enough for us, and we decided to commit.
And I think also what set us apart was, I think the three of us as a team, we were relatively financially strong, So, Bryant was retired, so I guess he got his big payout, and we had some Australian money behind us, and so I remember the broker asked us, if there was an issue, if the NOI did go down, like, can you guys still close in it, and your LTV can't be as high? And I said, look, we said the LTV could go down to 50% and we could still close, so I think that certainly reassured him, of our ability to close.
What did you guys like about the deal when you went maybe to tour it, and what do you see sort of potential wise in terms of what you guys were going to do with it? So talk about the potential in the deal and go from there.
Yeah, we really like the deal. Like any real estate, location is still number one, right? So first of all, we are very strategic in our acquisitions. So this really fits into our criteria that it is in a growing market in Waco. It's a great submarket, Texas submarket. It's in the Texas Triangle. So the demographic, everything is great. It's pretty much like a C-class property with a B- location. So that's what we really like about it. It's what we call a hybrid deal. What I mean is basically it has a pretty strong cash flow. When we actually running the operations, at the same time, we have a pretty good, based on our projections, right? We have pretty strong in terms of the back end, build up the equity when we are ready to actually transact and actually sell it. So our plan for this property is very strategic in terms of the, pushing out the NOI, right? We are trying to push this property from a C+ to a B- property by rebranding it. It's by upgrading the leasing office, putting in the playground. At the same time, just like we don't want to be a slumlord just by raising rent. We wanted to give value to the tenant. So we are upgrading the units. We set aside through the loan process, we set aside a huge amount of money, like close to around $700,000 for this deal, to upgrade 50% of the units. So people may ask, why not 100%? I think as a rule of thumb, we wanted to leave some meat on the bone for the next buyer. So that would have been an attractive deal.
Let's talk a little bit more about how old is the property?
72.
1972.
Yes.
Is it individually metered or is it two-pipe chiller?
No, it is individual AC,
Okay.
but it is an all bills paid.
All bills paid property.
But separately metered for electricity, but yeah.
Okay.
Yeah.
And then you guys got into the deal. So who actually found the transaction?
Angel, yeah.
Angel, you
yeah.
found the transaction?
Yes, yeah. The deal came out sometime in October of 2016. Initially, the deal worked. It was outside of our criteria initially. So what happened was we lost on another deal, and then as we were evaluating all the deals that were available, we decided, hey, let's look at Waco. We hadn't seen the property visually, hadn't laid eyes on it yet, so we decided to drive down, and that's when we said, yeah, this is the deal that we want to go after. And immediately, I think I called Kevin. Not realizing he was in Australia. I think it was like 2 a.m. or something.
That's right. Yeah. So I think it was around about Christmas time, I think. It was in the middle of the night. Yeah, no, I remember that very, very clearly.
So you guys got under contract on the deal, and then once you're under contract, the clock's ticking. Let's talk about those next 60 days and maybe a little bit about the loan process and how you guys decided on the type of loan that you guys went after.
I have to say, we got our LOI and we agreed to to the terms of the LOI and all that, and then the seller said they wanted to issue the PSA. We have to say the seller for this was a very large property trust, like one of the largest in America. And so they wanted to issue the PSA, and we asked, when are you guys going to get the PSA to us? And they said, 2-3 days? 3 weeks go by, and we still hadn't received a PSA. And a week into it, we were asking our broker, like what's going on? And look, it had to get reviewed from committee after committee.
So how many signatures that we need to get to have the PSA signed?
I think I remember like a week goes by, we hadn't heard anything, and so we were getting kind of worried. Were we getting played, or what was the issue going on here? And so I think by week 2 or thereabouts, the broker, just to prove that there was nothing funny going on, got us to hop on a call with the seller, and the seller was saying, look guys, I've got to get this reviewed by committee, and the committee was chaired by 11 people, and they need 11 signatures. So getting 11 people to all say yes to something and getting them all in the same room was quite a process.
That's really unbelievable. And
Yeah.
Now this big REIT that owned the property, how long had they owned the property prior?
So I think they bought as part of a portfolio, and so this one property in Waco just was part of this portfolio, and it was the only property they had in Waco, and so I think they only had it for how long was it, guys?
3 to 4 years.
Yeah, it was about 3 years.
Yeah.
And I actually met with another owner in Waco that also toured the property and, said the condition of the property when the previous owner bought it was in really bad condition. Occupancy was around 60%. And they came in and did a lot of work. So when we saw it, it had good bones and structure. They had redone the stucco, and there was a lot of work already done on the property.
They done well
when we
to
bought
stabilize
it.
it. Yeah, definitely.
So you guys saw the property. The occupancy was 95% going in on the deal. So what type of loan were you guys thinking?
Yes, it was a stabilized property.
Okay. So you guys were thinking what type of loan going into the deal?
Well, I think financing is a very key component of the deal, right? And being that I'm retired, I'm very risk averse. And I wanted to make sure that as right now, right, we are in a cycle that we don't know, if we're going to bust or not. Nobody can tell, right? Even though it may not fall off the cliff. But the strategy basically is we wanted to have a fixed rate. We wanted to get in this deal here, we have a 12 years fixed rate for the deal. We also get a green program, which is an energy conservation program that if you are eligible, right, they actually reduce the rate.
Right.
I think we were also leaning towards the Fannie program because there was, we had quite a, I would say substantial rehab budget, but we had a significant rehab budget. I guess one of the things that did attract us about the property was a lot of the surrounding properties, they were polished up, they were upgraded, people had invested money to, and so whereas this property was like hadn't had a substantial upgrade for more than a decade or so, so there was that ability to to put in new kitchens and to upgrade the property and put a new playground and all that in order to push up the rents, So I guess we were thinking about a Fannie loan so that we could borrow some of those upgrade dollars.
Sure. So on this deal, we did purchase price plus rehab, 80% on a Fannie.
Yeah.
Okay.
Yeah.
And you were able to qualify for green and got a little bit lower pricing.
That's right.
On the deal. Okay. Great. So when we were going through the process, any hurdles that came up through the loan process?
Yeah, well, these 11 guys in this committee just were.
Well, I guess once they signed the contract, right? Once they signed the contract.
Yeah. So look,
then,
they signed the contract, and literally, I think these guys did nothing else. So a few times we were, asking, for instance, early access, in the 3 weeks that we were waiting, So let me start. So initially, we had the LOI signed, and the broker said, actually, these 3 guys these 11 guys in committee, sorry, they wanted us to close, I think, by the first quarter of 2017, and we're like, why? Like, this wasn't mentioned at all. And they said, well, basically, they want to close out the books for first quarter 2017, and so we're like, we'll try, but for that we need early access. And they said, well, no, we can't do that, And so, look, the entire process really was kind of like pulling teeth in the sense that there was no budge from the seller because it wasn't just one; it was these 11 guys committee, and they all had to agree. And so, in terms of early access, that was a definite no. In terms of being able to, some of the due diligence documents, in terms of what was it, like a list of inventory they had in the shop, they couldn't get to us. It was just actually quite difficult to work with sometimes.
But we knew the deal worked, and we knew
Exactly,
that that we had to suffer, or not suffer, but just go through all the hoops and hurdles to make sure that we were able to deliver and close.
It was worth putting up with the girl's father in order to marry the girl. She was worth it. Yeah, that's right. Yeah.
Gotcha.
Yeah, because at the end of the day, we knew that our investors, and we would benefit from doing this deal. And okay, so you have to work with the seller for maximum a couple of months, but that's it, right? After the transaction, you don't have to worry about them. So stick through the process and keep going.
Yeah.
So most Fannie Mae transactions, they require all the key principals to be U.S. citizens on the deal. And so on this particular transaction, you guys have been in the U.S. for a while now and investors in the U.S., but you guys still don't have U.S. citizenship. So talk a little bit about that process and how we sort of, helped you along to get there in terms of approval. Yeah.
So we've done agency debt before with the Freddie SBL program and things like that, right? I guess with this, well, we checked with you, James, I guess initially if our net worth would qualify and the financial strength that we brought to the table, that would qualify, and it would. But I guess there were some other things that Fannie required as well, in terms of basically approval from attorneys in Australia saying that the laws that govern me here would be applicable in Australia. And so, look, I'd say it was just one of those things like, a bureaucratic tick in the box, it was a fairly straightforward kind of letter. I guess the issues, to tell you the truth, James, was more the time zones, because whenever you guys asked me to call Australia, I'd be up until 12 midnight, and making calls back there. But look, it was more just getting approval from an attorney in Australia saying that the laws that apply to us here.
And this is really a new regulation, is it right, James? It wasn't like that last year.
With nothing at all.
So I guess to be clear, so Fannie Mae is always going to require a waiver for a key principal with citizenship outside the U.S. So we teed that up early in the transaction, got that approved with the lender, so that wasn't a problem. The problem that came up was towards, I guess we had maybe 2-3 days before we were going to close, and we had approval, we had locked the rate, and then legal counsel called you and said what?
They said they wanted a hard copy, basically. We'd sent an electronic version. We thought electronic version, that's all good, right? But then they actually wanted a hard copy, piece of paper, ink on a page, that kind of thing. And to transfer...
A hard copy of what?
Of the what was it? The legal term was the foreign opinion of counsel to say that that the laws that govern us here would be applicable in Australia. And so look, to get a physical piece of paper from Melbourne, Australia to Dallas, Texas, that takes time, and the timetable of that actually would have taken us past closing.
So I think you guys were trying to close on a Tuesday, and then you got a call from whether it was your counsel maybe on that Friday,
and there was a public holiday on Monday.
On Monday.
That's right.
And so that you were already day 57, needed to close on day 60. Did you have any extensions?
Nope.
Yeah. Again, these 11 guys wouldn't allow us any extensions.
No extensions. Yeah. How much money hard?
150,000.
150 hard into the deal
yeah.
plus pursuit costs. And then what did your legal counsel say to me? Do you remember?
I think, as in this is the guy's counsel, right?
Callister, yeah. Do you remember
yeah.
what they said? They're like, James, can you work your magic here?
That's right.
And
Yeah,
figure
yeah,
this
yeah,
out?
Yeah.
And he did.
And he
worked
did. Yeah,
magic.
yeah, definitely.
So I got on the phone with the lender, sort of walked him through the situation, because essentially the lender's attorney was saying we can't close without it. Right?
Yeah.
And so we went back to the lender, sort of leveraged our relationship, the number of deals that we do with this group, and we were able to push that requirement to post-close. And so you guys were able to close on Tuesday, take over the property. I think, did you have a site tour even on Wednesday? Like I know some
That's right,
investors
yeah.
in your
The
group
next
were
day
down
we
there
did,
Wednesday.
yeah.
So how hard do you think it would have been to get an extension from the seller?
Impossible.
Impossible.
Yeah,
Yeah,
we wouldn't have gotten. We
Yeah,
would
we-
have lost.
You would have lost. Yeah, definitely. Yeah.
I think, like what I said, throughout the transactions here, right? Financing is a key deal here. And if you could have went with another lender, another broker, God, we might have lost all our money on the table. And this doing with REIT is not easy. So they probably just like, hey, sorry guys, next.
And I think in that way, like it does speak to the power of relationships that you, James, knew the right people to speak to. Because at the end of the day, I guess I just viewed it as just a really. I mean, there's some bureaucrat at Fannie Mae headquarters that needed to tick some box that they just needed this physical piece, and you knew who to call. So yeah, look, that certainly made it a lot. Reshowed us that.
Yeah,
that we,
so relationships are important. We definitely believe that. That's one of the core philosophies for Old Capital. But James, let's just you and I have a conversation. Let's kind of talk a little bit about this deal. They've talked about on their side. Let's try to talk about a little bit about our side. Talk a little bit between just you and I.
Sure.
Talk a little bit about some of the challenges on this transaction. We have a property that's being bought in Central Texas is really a secondary, tertiary market for one. Two is we have one person that has multifamily experience. You have another person that has multifamily experience, but they're Australian citizens. So that's a very tough thing. Where the guidelines for Fannie Mae are completely different from guidelines for Freddie Mac. Even though they had approval with Freddie Mac small balance, they're not coordinated together. So where you think you're approved over here, then you would be approved over there. That's not the way it works. So talk a little bit about some of the challenges that you felt as a loan officer you had to overcome.
So when we were teeing up this deal, typically they're looking for the KPs to bring, net worth and liquidity, but then also the experience, right? So the experience of the group, we had to really sell not only that they own 30 units, but they're also, we had worked with this group before in the past, and we have closed many loans with the sponsorship group. So they got comfortable not only with that and their education in multifamily, and then we had leveraged their third-party property manager, who we'll talk about a little bit, but sort of taking all those pieces in unison and really teeing up the deal, because a lot of these transactions, lenders will cut back the leverage, right? So if they see that maybe the borrower is not local or the borrower doesn't
and you
have
guys
good
are not local. I mean, that
Right.
property from, Brian, from your house is how far?
About 2 hours.
Angel, same, 2
Same.
hours. And you guys, how far?
3.
3 hours. So it's not a local property. So
Right.
it's-
So we're looking, outside, smaller market than, your Dallas or Austin, San Antonio, and then also no local sponsorship. And so the jump here was a little bit bigger. So a lot of times Fannie likes to see you jump maybe from maybe 100 to 150, maybe 200. So you guys went from 30 up to 150. So you gave us some pushback a little bit on the size, going up in size, and then also foreign sponsorship. So a lot of times we try to keep the deal delegated, but when it does have foreign sponsorship, you can't get that approved delegated. So you have to go all the way up to Fannie.
So again, what are some of the things that they provided to you so you could get comfortable with it?
So we really went through their business plan and really looked at some of their past experience. Like Brian's been in some passive deals, some larger transactions. Angel spent a little bit more time on the multifamily side just in the past couple of years after buying a couple of deals. And then Kevin and Daniela really brought a lot of the net worth and liquidity, so that they got comfortable with the sponsor also from in case this deal starts going sideways a little bit, they had the financial support to still make the
And
deal
you got
work.
max leverage on this deal?
So max leverage, yep. So 80% loan to cost. So we got purchase price plus rehab and then 80% of that. So
I think at the end of the day,
James is more than 80%.
More than 80%.
It's like 81, 82%.
Well, we rolled the closing costs too.
Yeah,
So
yeah,
it was so we rolled in 3% in the closing.
it was more money than we expected. When we actually came to close. Yeah.
You don't hear that often.
All right, sounds good.
So that's, I mean, on this deal, especially in today's market, as interest rates and pricing gets higher and higher, 80% is getting more and more difficult to do. So a lot of transactions that we're looking at today, it's somewhere in between 75 and 80.
So talk about this. You guys, no one lives in Waco where the property is. So how do you guys manage it from 2 hours away for you guys and 3 for you guys in Houston?
Is having lots of good things to listen to in the car. Old Capital podcasts, to pass the time in the car.
Well, I think it's one of our key requirements is we don't believe in remote management, and we are pretty hands-on, right? So even though it is 2 hours driving, it is not difficult at all because, we actually go there every single week and work with the management company and oversee the project. It's a project. Right, so we can talk a little bit more about how we manage it. Of course, we use third-party management company, right? But it's not like we can just hands off on that. We have to do a lot more work, being a sponsor, being an asset manager on this deal here. So, do you want to talk a little bit more about how we split up the work, or?
Well, I would just say that, I mean, we divide and conquer. We have, to Brian's point, we do visit the property, initially right now, once a week. The projects that we come up with, we divide that between us and decide who's going to take what. And, and that really helps a lot because Kevin and Daniela, they live a little bit further away, so they can do some of the back end stuff that doesn't have to be done on site, where Brian and I can visit the property more frequently and do those on site tasks like the CapEx budget and stuff like that. So we try to manage that.
So.
Yeah. Well, I was going to say, I mean, I guess one of the good things one of the things I love about real estate is a lot of the work really is all loaded in the front end. Like a lot of the stabilization, it's all in the front end. So for us, I guess our model has been, when we lived in Melbourne, Australia, we invested in Melbourne, Australia, and when we moved to Miami, we invested in Miami, Florida, and now that we're in Houston, I guess we're investing in the Texas Triangle. And so look, we still own assets in Australia. We own assets in Miami still, even though we're living in Houston. We own assets in Memphis. And so I guess we're kind of used to managing assets from afar. And I guess the key to that, once again, is people and relationships, just having the good people in place.
So you guys had, you syndicated this deal. You had a bunch of unrelated people invest in your deal. How many investors you guys have in the transaction, or approximately, you remember?
Yes, we've got 35.
35.
Yeah.
35 total positions. Now we did invest in the deal, so we're part of those as well.
So how did that work? What is your investor pool looking for, in the marketplace, and then what maybe some of the challenges that you're seeing in the marketplace a little bit that you had to kind of overcome to get the deal done from an equity raising standpoint?
Yeah. With the raise in this deal, about 60% of the capital came from the Sumrock Investment Group. 40% came from outside. And so, I guess speaking to generally what our investors were looking for, certainly I think a double-digit cash-on-cash return is what we're looking for. For our Australian investors, probably a little bit less because it's really tough to find cash flow and yield in Australia. So, but again, we wanted to offer what we could get, which was a double-digit cash. So that was certainly very, very handsome and compelling. More than that, I guess, was certainly upside in terms of being able to increase NOI, to increase the capital gains of the property. So
I myself is a passive investor other than just a deal sponsors. So when I underwrite deal, I wanted to really making sure that I can do all the asset tests, stress tests, making sure that even the economic vacancy can go down to even 40%, I have a cash flow. So I like what I tell my investors, I cannot guarantee 100% that you will get exact return like we said in the performer. But we'll do our best, right, as a sponsor, and as well as actually we know that the economic vacancy, it doesn't matter if the market is going down, we still have positive cash flow. It may not be 10%, 15%, right? If we got some positive cash flow, we can ride through this, the cycle. That's the reason why we wanted to have a 12 years fixed terms rather than a 5 years or, variable rate.
And what was the minimum investment that your clients, your partners got into?
It was 50,000 was the minimum, and we did that because we wanted to limit the size of the
limited partners.
Yeah, the limited partners. Sorry about that. Yeah.
And again, talk a little bit more about your rehab dollars. I mean, where did that go? That broke down to? I mean, playground?
Yeah, so Bryant said, mentioned that we're going to be rebranding the property. So part of that's not Landmark anymore.
Was that required because of the demographic down there? What is it, a marketing thing? Why
Yeah,
why
just-
did
just
you-
market- yeah.
Why did you have to rebrand it?
So the property is currently, the cash flow is really strong, but we saw benefits in increasing the rent. But to increase the rent, you've got to improve the property. So that's part of our strategy there, as well as all the properties around us are also being bought up and being rehabbed. So we didn't want to be left with a product that wasn't as good as the rest. So we wanted to be competing in that marketplace. So we are going to be rebranding, and it's actually been rebranded to Richland Springs Apartments. Now it's no longer Landmark Apartments, so we're doing the sign, we're doing the playground, we're doing a lot of interior rehabs, adding the backsplash, the vinyl flooring, planking, two-tone paint, new fixtures, and we're just trying to create a vibe and create a good atmosphere for the people
After you
there.
do all that stuff, how much of a raise do you think you're going to get on average rents on the property? Any idea what that's going to be on your projections or your performance?
Well, for example, this is a mix of 1 bedroom, 2 bedroom, and 3 bedroom. And depending on the size, right, the 1 bedroom and 3 bedroom, we proved that actually, that for example, the 3 bedrooms, we were able to charge it has been proven already. So they upgraded about 10 units before we took over. So it's been, for example, 3 bedroom has been proven 12, 20, right? Something like that.
Yeah.
And then right now, the rates that we charge was the not upgraded unit is only about 10, 30. So it's a significant opportunity to actually increase. It has been proven, but it has not been done yet. But some of them, like maybe the 2 bedrooms, they are more competitive. So we have to adjust that accordingly. So maybe we can go back to the rehab budget, right? So we have about
665,000.
665 for the CapEx project, and then we got another 222,000 required by the bank.
Sure, from the grid
So
and stuff. Yeah.
this is one thing we like about this property. This is really, after we got the engineering report, Brian Amos gave us an A on this. It's really minimal deferred maintenance required by the bank. It's just ridiculous, right? 22,000 for this a big project like this. And so we kind of look at it out of the 660, right? How we strategically, in terms of allocating money to push the rent higher. This is including directly, right? The upgrading the interior units. So we figure it out in terms of how many turns that we got every month, right? So in a year, how many units we can crank it out. So that's one thing that we put about 50% of our budget to upgrade the interior. The rest of it is really, we go down in terms of reducing the expenses, such as this is all individual AC. So we have Brian Amos took a look at that, and maybe 15 of them, 12, 15 of them, you don't need to fix it now, but if you replace it with a new one, it's more energy efficient, right? And also, this is part of the green program. We actually plan to replace all the low flow aerator, the shower heads, the toilets, and we're going to go to use it to reduce our expense. So the whole thing is really to increase the NOI by pushing the rent higher, and it's actually reducing the expenses, being that this is an all bills pay. We are thinking about implementing the RUP program, but it may be the second stage. We don't want to do so many things at the same time.
So rehab the interiors, do some work on the exterior, bring rents up $150, $200 if you can on the larger units. Okay,
exactly.
Great. Maybe we'll go sort of one by one on this question. Maybe any advice or sort of habits you guys have that you can talk about in terms of, as now general partners on a larger property, sort of in the next year, what's sort of your goals going forward after closing this transaction?
Our goals going forward?
Yeah. So you close this deal, the rehab got started sort of the next maybe 6 to 12 months.
Well, maybe I can try to answer that. As how we see the multifamily investment, I break it down into 4 phases, right? One is really the acquisition phase, where you actually have to look for the deal, analyzing the deal, spend a lot of time working with the brokers to really try to get the deals, right? That's phase number 1. Phase number 2 is what we call closing the deal, in terms of raising the money on contract and close the deal here. That's phase number 2. Phase number 3 is really the operation, how to maximize your investments by pushing the NOI as high as possible. Then, of course, the phase 4 is with the exit strategy, when you're ready to sell it. So it really depends on when you're talking about the next 6 months, 9 months, right? Right now, we close the property. It's our obligations to our investors, making sure that we can execute our business plan efficiently. So that's our number one priority. So we meet almost like every day and talk about this, making sure that we can do it as much as possible. So it may take another 2 months or so before we stabilize our plan and, we see that, yep, this is really on track. Then we can still focus our energy to look for the next deal. So that's our plan on that in terms of I don't want to overload it too much. Hey, I want to make another 2 more deals this year, which is, especially in this market, we never want to overpay above the market price. I mean, it's good that it's okay to do the market price, right? Because it's so competitive, but we don't want to actually overpay that.
So, Brian, you were a passive investor in several deals before. Now you're a sponsor. What's
your deal too, Michael?
Yeah, and one of my deals. So what's been some differences? So you had a certain perception of what it was like to actually lead a deal, and now you're a co-lead in a deal. What's different from being a passive to being a co-lead?
Well, one of the reasons that I wanted to lead the deal here is I have really, I wouldn't say full control, but it's a lot more control, my destiny. I think that I can actually see the whole process, especially from the passive standpoint, right? How I look at deals. So it actually helped me to, when I invest to the next deals, what am I looking for? So it's not just by the numbers, but by really you have to peel the onion and making sure that this is the right number.
Is there anything different than what you thought it would be than now that from where you were to what you experience now? Do you have a different respect for some of the guys that I won some deals?
Absolutely. We should compensate the deal sponsor. That's quite some hard work.
It's a lot of work, right? I mean, and then in all seriousness, a lot of people think it's easy, and there's a lot of work and responsibility that goes when you kind of the captain of the airplane, to use a Paul Peoples flying analogy, where you're captain of an airplane, you got a lot of responsibility and got all the passengers right in the back of it, and things happen. I mean, I found in this thing, you have your projection, your pro forma, you never hit your pro forma. Either you do better or you do worse, but you never actually hit it. There's a lot of efforts and things happen along the way. It's only been a few months, but wait till you get a fire or someone dies on your property or something, then it gets interesting after a while. So cool, James, you got any?
Yeah, so do you guys want to share, maybe Angel, so we talked a little bit about operations side, but maybe Angel and Kevin and Daniela talk about maybe a lot of these deals are put together with partnerships, right? So maybe talk a little bit about how you guys manage that and sort of split up some of those responsibilities, because I think a lot of times there's more than one captain of the airplane sometimes on these deals. So
sometimes.
Right.
So
I'll talk. So this is Angel. So what I'd like to say is that the partnership really does make a difference. Where in this deal, not only are we managing the deal together, but we went through the experience of the acquisition together, and we went through the acquisition of underwriting before the acquisition process together, and we got to learn how each other worked and how to leverage each other for different things. And I would say that's something that not many times you can find is a good mix of the right people.
I would say, the breakdown between, I guess, these three parties, Brian, Angel, and Kevin, myself, is an equal split. And it allows us to have all equal interest in making this work. I mean, we have family members as part of our investment group. So we all have a very vested interest in getting our business plan to work. So we play to our strengths. We came up with a list of things that we need to do, and it's a growing list. But, whatever interests, whatever strengths that we feel are in each other, we would volunteer actually for the work. None of us are afraid of hard work. And in fact, we actually we meet up maybe 3 times a week. It's something crazy like that. I feel like I'm talking to you guys all the time. And we're constantly checking with each other. I mean, 3 brains are definitely better than 1, especially at this...
4 brains.
4 brains, yes.
Maybe 5 brains.
Exactly, yes, with my baby. And, at this initial stage as well, it's a lot about shopping it out, seeing what kind of value we can get out in the market, getting bids, tendering a lot of the jobs. I think between the 4 of us, we just divide and conquer.
So maybe I can spend a minute talk about how I look at in terms of getting into the multifamily investments, right?
Sure.
One is you can stay as passive. Basically, you have to know your deal sponsor, who you work with, who you invest with, right? And, which is a good way to invest in multifamily. The other model is you could be a sole individual owner where you're the one that actually make all the decisions. But at the same time, you're the one that actually is your baby. If it fails, it fails. You have to, for example, in this deal here, right? If not three of us, we have to put in 150, 180,000, your own money on the table. If the deal doesn't go through, you lose all the money. For three of us, we share the risk, right? We share the reward, right? So this is a great thing in terms of really how I like the partnership. But we didn't form a formal JV in day one. The reason is this is just like a partnership. It's almost like a dating game. Don't call it as a one night stand.
Yeah. that makes sense. I think a lot of what people miss when they're trying to scale up in the business is just the amount of pursuit costs it takes to get going in these deals.
Yeah.
Yes.
When you're doing a little house, you put up $1,000 in earnest money. You do a little 38 unit deal in South Irving, you're putting up $25,000 in earnest money, and here you said it was 150.
That's right, 150.
Yes.
Yeah, the last deal I did at the end, we had like $2 million hard. So it's like, it's like amazing how quick that stuff scales up when you go up the food chain ladder, and you don't think about that, and then just try to get from the start to the finish line. I don't realize how much you have to actually put up as you scale up in the size of these deals and the quality of the deals. And do you have a plan to conquer that? And that's something that the people don't think about, that I think can kind of catch them when they're bidding on these deals. So I would just like to always put that out there on the table. That's impressive that you had three people who do that, and that's kind of the way you structure it around it to get it done in front of the capital until you get it reimbursed when you close.
Yeah. I'm very surprised by how organic this entire process has been. I think it certainly helps that we were all kind of friends before this process started. I think it certainly helps that we all share a similar kind of humor, we kind of laugh at the same kind of things, And I think it helped that my son had played with Angel and Janice's kids, and he's been to the swimming pool. So I think in that way we had a very strong friendship to begin with. In terms of to answer your question, James, about dividing up of responsibilities, I think even before that, it's important to partner with people that do have high character. And I can honestly say that Bryant and Angel are people of high character in the sense that they're not penny pinching, like they're not working, I do this, you do that, and keeping score constantly. But if they see a need and something that needs to be done, Bryant will just get on the phone. Angel will drive to the property, and hopefully we'll step in as well. But I think even before that, just partnering with people of high character is very important. And look, it's very hard to gauge, but for me, I think what was important is that both Bryant and Angel are family men, and they're very committed to their families. And I think that counts for something.
Yeah, I mean, a lot of people ask me about partnerships, and if you're not friends or you don't like the people before, it's very rare that after the transaction or during the transaction, when stuff happens, that you're going to be better friends after. So let's start on a good foot going into some of these partnerships. I think would be a piece.
Yeah. So I think we'll kind of wrap it up. Congratulations on the transaction. Sounds like you're off to a great success. I definitely like Waco. I definitely like the partnership that you guys kind of have formed, but being friends kind of first,
having some fun,
and having fun in these deals. And we appreciate you guys coming in and spend some time and having us kind of understand a little bit about some of the dynamics that went on in the transaction. James, great job putting it together. We appreciate that. If people wanted to get in contact with you guys, what's the best way? Is it an email address? Who's it to?
Well, Kevin and I actually have a website, and it's DillonPartners.com. Dillon's our last name, spelled DHILLON, DillonPartners.com, and all our contact details are there. Kevin and I are also both on Facebook, so feel free to reach out.
Sure. My email address, this is Angel Flores, by the way. Email address is AOFlores, that's with an S, 92@gmail.com.
Hi, this is Bryant Ho. My email address is Bryant, BRYANTHO.LEI.com.
Sounds great. Thanks, guys, for coming in. James, what else is going on in the Old Capital world?
A couple things. Our next big event is going to be the Old Capital Conference on Thursday, October 5th, here in Addison in Dallas-Fort Worth. So that'll be a full-day event. So
why should people come to that deal? Why is that important?
That's really focused on BNC apartments here in the Metroplex and surrounding areas. We're going to have the top listing brokers, property management companies, lenders and, a bunch of owners who are investing in today's market. So I think you not only learn a lot, meet a lot of great people, and just really accelerate getting to the point where these guys are.
That's great. Some good information. We appreciate that. If people are interested in kind of learning more about multifamily financing, don't forget to go to oldcapitalpodcast.com, Look to get the 15-page white paper report on multifamily financing. It's a report that I think gives you the kind of the ins and outs about what's going on. And don't forget to also ask for Michael Becker's due diligence report. Michael Becker's due diligence report, some great checklist information about what you should be looking for. And then also, too, is that if you do have a second, go on to iTunes and see if you can give us a 5-star rating on Old Capital Podcast. So we appreciate your time. Guys, all of you, Bryant, Angel, Daniela, and the guy who puts the whole deal together, Kevin, thank you very much. Michael and,
really appreciate
and
the
James,
opportunity.
thanks for spending some time with us.
Thank you.
We appreciate it.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.